Hello, this is Jenny Clark with Solvability, and today's What's Up to with Mitch session is all about how do we keep from running out of cash? Great question. Mitch, as you know, is my imaginary federal contractor client who is always asking me these questions, and my job is to make sure that I first remind him what he's already got going, identify whether this is a big issue or a little issue, and then give some options for what he might want to do and some of the people he might want to talk to get more information or what we're going to do to help solve that issue. Most of the time I'm just saying, hey, we've got that taken care of. Remember how we did that? That's what we want to be able to do. So Mitch is a bottom line kind of guy. He just always says, Jenny, I just want it all to work. Here's what he's looking for. Here are the 5 questions he asked. Why is it that we're profitable, but we're still so tight for meeting payroll? Great question, Mitch. You could be profitable but tight on cash because you're having to spend cash to onboard 15 new employees that we brought on last month. And remember, we brought them on last month, but you can't bill on that contract until the end of this month, and we're still waiting to get paid on that. He's like, oh, yeah, that's one thing. You could be profitable, but you could be tied up for cash because you've got a line of credit and you haven't gotten an approval to increase the line of credit even though you've got some contracts, and so you're bouncing against the top of that line, and that makes it feel like you have no cash. The other thing is maybe you're not as profitable as you need to be. Maybe some of the contracts that you brought on, because you bid them a year and a half ago, and the people that you had intended to hire are no longer available, the people you had to bring on to fill it are more expensive, that contract's not as profitable as you thought it would be. And so it's not generating as much cash. And so again, you're not getting where you want to be. You're profitable, but you're not as profitable as you deserve to be. How do we prevent these cash crunches? You're going to have cash crunches, just like everybody's going to have problems no matter what they are. It's how you deal with them. Cash crunches are things that sometimes you can predict, that you know that certain times of the year there's going to be money's going to be a little bit tighter. For example, I always tell people that January and February as accounting activity and net income for a government contractor usually are not great months because there's so many holidays and things are kind of slow to get started. New contracts that were supposed to start didn't start on time, and then they kind of slowly start ramping up. So usually January and February are not good months. By the time you get to March, you're usually okay. Your net income comes back where it should be, and you kind of get caught up on that. The other thing you'd want to do is identify things that are big expenses that you only spend certain times of the year. For example, some people have a compensation plan that they evaluate everybody in May and give people an increase in May, and that would cause a cash crunch right after that. It might be that you fund your 401k, you do your profit sharing in March. That's going to be something that you need to plan on because that might be an extra $30,000 or something like that. Could be that you're going to buy some software. Could be that you're getting ready to hand out some bonuses. Could be that you want to onboard a recruiter or a business developer. Those are things that you have to plan not only for the expense, but also the additional cash, because it's going to take a little bit of investment time before there's return on those investments. As far as projecting cash flow, I like to have people have a pretty good idea of what their monthly operating expenses are. So they almost carry around in their back pocket, it costs us $50,000 every month just to keep the lights on. And then on top of that, our payroll runs, I don't know, 100,000 every pay cycle, something like that. Have those numbers in your head, because then when you're trying to go back through it, you're not looking at a bunch of little numbers and adding them up. You're just kind of rattling off this much for payroll, this much for fixed expenses, this much for that. And you can quickly get it back in sequence and understand what's going on. You'll go, oh, wait a minute. Those are our normal 7 items, but remember we had this extra 8th one because we had to pay out that tax bill that we've been trying to fight for so long. Why can't somebody tell me what we spend on every month? Excellent question. In preparing cash flow statements, in the past, and to me, it's probably more of a cash requirements report. This would be what we expect to spend during the month. What happens is you set it up and you say, well, up at the top, you'll say, here's how much money we should collect from receivables, and that's going to be usually last month's receivables. That would be simple if that was all it was, but for a government contractor, you've got to go, okay, these people pay us in 45 days, these people pay us in 60 days, this one we're a prime on, so we get paid in a couple weeks. You got to have to balance all that and when it's going to come in. The other next section is usually your payroll, because that's usually the biggest chunks of cost. And then down at the bottom would be your monthly recurring expenses. And when I say recurring or fixed expenses, they might not be exactly the same a month, but I'm not going to worry about whether my Verizon bill is $120 one month and $100 the next. I want the big chunks of money that I have to worry about. How much am I paying for rent plus utilities plus telephone and all of that? And I should have a big round number in my head. That's $20K a month. I should know, okay, my Blue Cross and Blue Shield or Florida Blue bill is $18,000 this month or whatever it is. Have those big chunky things. Then there's going to be costs that are on your accounts payable. These are invoices sent to you by a vendor for office supplies or whatever it is. Actually, more likely, these are things you purchase online and put on a credit card. Those things are going to bounce around a lot. And you're not going to want to stop and have to think a whole lot about cash flow when you're trying to make a decision whether to buy a new laptop for one that just got broken. You're going to do that. So you want to have an idea of what your fixed expenses, your payroll, and then kind of like a band of the expenses that you want to plan for, but if you don't have the money, you're not going to pay it. So you can't really do a reconciliation at the end of the month that said, here's how much we thought we'd spend and here's how much we spent, because what you actually spent is going to be based on whether you had the cash or not. The other thing that people are frequently looking for is, how do we make sure we've set aside some reserves? Sure, it would be great to have cash in your bank account to pay everybody off in the company tomorrow if the company shut down. And that would be you'd be running your regular payroll. That wouldn't be the problem, but you'd have to pay out maybe their accrued leave at the end if they were terminated. And so I've had companies tell me, well, we're going to put that money in a CD so we always know it's there. Sure, go ahead. You can do that if you want to. Some people like to have some reserves, and that's certainly worth, you have to really just make a judgment call on what you feel like needs to be covered. Some people want to have 3 months worth of operating expenses, but if you've got a line of credit and that's what you're doing, all you're really doing is borrowing the money off the line of credit to stick it in a special account. So to me, you're paying interest on doing that, so I'm not sure you want to do it, but totally up to you. So Mitch is unstoppable. Are you unstoppable? You know where you want to go. Solvability can help you get there with the cost and pricing intelligence you need to accelerate and scale your business. Most of our clients get started with our free wrap rate calculator. What that does, it's a spreadsheet, shows you how to take your overhead and your G&A and apply it to your pay rates, come up with a billing rate. The other way to look at it would be to take a billing rate because your prime gave you and said, here's the billing rate you're going to use. And you need to know what you can afford to pay people. So we take a look at your overhead, your G&A, and your profit to decide what that's going to be. Now, the complicated part of it that's not included in the free wrap rate calculator is really understanding how you calculate your overhead and your G&A, how you are within norms for the industry, and what you need to be doing to balance that out. And are you competitive? So when you need that additional type of help, something besides the wrap rate calculator, be glad to talk to you about that. In order to get the wrap rate calculator, you can go to our website, solvability.com. That's S as in Sam, O-L-V as in Victor, and the word ability.com. There's a wrap rate button. You can just download it. It'll send you an email, and it also sends a little video. If you got something more complicated, I'd love to talk to you about it. You can just send me a text to my mobile number, 256-882-6276. Tell me who you are and what your company is and what your urgent issue is, and we'll set up a call. I'd love to talk to you about it.